please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, straight to the top story this evening. Relief for telecom companies as the Cabinet has approved two key measures to facilitate investments and enhance the ease of doing business in the telecom sector. Firstly, the Cabinet has extended the payments tenure for auctioned airwaves from 12 years to 16 years. This move is expected to increase the cash flow for telecom companies. The other key measures include relaxing spectrum holding caps from 25% to 35% in a service area, and this will facilitate consolidation of telecom licenses and may also encourage participation in future auctions. Joining us now to discuss this further, Rajan Mathew, Director General of the Cellular Operators Association of India, the COAI, and Sanjay Kapoor, former CEO of Bharti Airtel. Rajan, Sanjay, appreciate you joining us. Rajan, along expected lines, because this was the recommendation of the interministerial group set up to study this matter, what is it going to mean now for telcos in the short term?
So, Shireen, you're absolutely right. It is what was expected. However, we remain grateful to the government even for these small benefits extended to the industry. However, the systemic issues of the industry still remain unresolved. You saw what has happened to Aircel as a result of these things not coming much quicker and faster and in time. So the industry still remains very much at risk going forward.
Okay, so you're saying the industry remains very much at risk, but in terms of what happens to cash flows, given the fact that the payment period has now been extended from 12 years to 16 years, what is that going to mean from a cash flow perspective, Rajan?
So it certainly does free up cash to be used instead of paying the government that money will probably be used to pay other debts held by the public banks and private banks and other operational needs. So yes, there is short-term relief. However, those that are on the edge, like Aircel, have already gone over the edge. So this will be some partial relief. But remember, Shireen, as you rightly put it, in the long term, all of these operators will end up paying more in terms of total outflows because the interest rate has not been reduced either. That was the other thing we had requested.
Okay, so the interest rate has not been brought down. So while there has been some relaxation in the payment period, you're saying that the actual outgo will be higher. Sanjay Kapoor, Rajan Mathew, they're saying it's not enough. The industry continues to be at risk. How do you see these decisions impacting the future of the sector in the short term?
Look, first and foremost, we've all moved to an oligopoly in the country. And to support an oligopoly, which is a play between 3 or 4 players, the consolidation of spectrum is virtually a given. If you do not increase the limits, then you presume that all players, if there are 4, will be equisized, which is not possible in any oligopoly.
Right.
There are 1 or 2 big players and there are 1 or 2 small players. And to create 1 or 2 big players in the market, you have to up the spectrum cap. So I think government, although a commonsensical decision, has taken a decision which is good to support an oligopoly and the structure going forward. So I think it's perfectly okay to do it. The problem is that industry, in order to buy more spectrum and utilize that cap, needs a lot of investment capability, which the current balance sheets are not permitting anybody. And there are so many other issues that render the industry more competitive or more sustainable, rather, I would say, which have not been touched. So whether it's the government levies or it's the SUC or anything else, it has not been touched. So given the current circumstances, if you were to take this measure taken by the government and then the elongation of the payment period, which eases out the cash flow. But you have to keep in mind that what is driving the NTS in the market is the net debt to EBITDA ratios. In the absence of EBITDA and draining EBITDAs, those ratios are reaching horrendous levels where more and more assets are going to become NPA. Right? Now, that doesn't really get overly, helped out by this measure taken by the government. So I agree with Rajan that although these are good to have measures, they are not game changers to increase the sustainability of the industry.
Okay. Rajan, Matthew, let's talk about that because, you know, we had a discussion with you, with all of you, in fact, a few months ago where we were talking about the possibility of telecom being the new steel in terms of the exposure to the banking sector and the vulnerability of the banking sector on account of the heavy debt. What is the current position, the debt position on account of the industry? Rajan, if you can leave us with a picture. Rajan? Oh, we seem to have lost that line with him. But Sanjay, I'll give you the final say then. You're saying that this is a band-aid. It's clearly not enough. And the sector continues to be vulnerable. And it's only looking like it's going to get worse.
Yes, absolutely. I mean, you know, we all have to appreciate that while we are still trying to put out a 4G network, which supports a great consumer experience and be competitive with the rest of the world, we don't have enough fiber, we don't have enough infrastructure to invest back into outside spectrum. And while we are talking about all this, the discussion about 5G is already ripe. And the business case around 5G is going to be a lot more difficult than the 4G. So given all this, where is the sustainability of the sector? It's really not there.
Sure. Okay. All right, Sanjay Kapoor, we'll have to leave it there. Perhaps that headline should say partial relief for telcos, because as both of our guests were pointing out, the sector continues to be at risk, and issues like the cut in the spectrum usage charge and some of the other government levies not being addressed by the government just yet. Time for us to head into a break, but more news continues on the other side. Don't go anywhere. Global market check now. U.S. stocks trading lower and trade on the back of Gary Cohn resigning from his post of chief economic advisor to the U.S. president. The Dow has opened 150 points lower. The S&P 500 is trading over 0.5% lower. The Nasdaq is also close to 0.5% lower. This because the markets feel that Cohen was actually the voice of reason, perhaps, in the White House when it comes to the issue of tariffs and tariff restrictions. But Wilbur Ross speaking on CNBC saying that the U.S. trade deficit has risen to its highest level in almost a decade. Data released from the Commerce Department shows the trade gap jumped by 5% in January to $56.6 billion and was higher than the estimated number. The deficit with China widened particularly sharply, coming in 16% higher year-on-year to $36 billion. The data is likely to add fuel to Donald Trump's protectionist rhetoric. U.S. Commerce Secretary Wilbur Ross, speaking to CNBC exclusively, says the government's aim is not to be disruptive, but to balance the deficit, and they don't want to see a trade war.
He has a willingness to give an exemption to Canada and to Mexico, provided that we work things out in NAFTA to where the economic security of the country is at least as well protected as it would be in the context of these tariffs. So he's already indicated a degree of flexibility, I think a very sensible, very balanced degree of flexibility. And I think that you're going to see, as you understand the details of what actually is going to happen, that we're not trying to blow up the world. There's no intention of that. We want to balance our needs to fix the trade deficit with the needs of the economy and the needs of the global economy itself. Chinese direct shipments to the U.S. are actually a fraction of what they were several years ago. But the reality is that they're transshipping material through other countries. And that's why this has to be broader. You can't do it just by pinpointing China. We've already got lots and lots of trade orders against China on steel products. And all that happens is it's like whack-a-mole, they come up somewhere else. So it has to be a little more all-encompassing. But we hope and we believe that at the end of the day, there will be a process of working with the other countries that are our friends, who, by the way, are also somewhat victimized by the same practices. This is not going to be a big trade war. The president would not have indicated flexibility on Canada and Mexico if he just wanted to do very extreme things. This is an idea that's been thought through over time. and watch the execution.
Well, that's the U.S. Commerce Secretary Wilbur Ross, but the global markets at this point in time, the U.S. markets are trading in the red. With that, it is time for us to wrap up this edition of What's Hot. Don't go anywhere. Coming up next, the bears tighten their grip on the Lal Street as the markets fall for the 6th straight day. The Nifty has now lost over 1,000 points since hitting record highs at the end of January. 14 lakh crores in market capitalization wiped out in just the last 30-odd days. Markets today, Talk Back takes the market action forward.